Morning, Jason from daytradeideas.com. Looking at the Aussie dollar, yesterday we've been going on about this all week actually. Aussie dollar should head higher. We spotted that we were building this inverse head and shoulders pattern and we were looking for a bottom around here. Well, that's all worked out quite nicely. We've been going up. This is the fourth day in a row, and if anything, the move's starting to accelerate. So that was expected really once we got through this trend line 89.80. Which has held overnight today, and we have accelerated higher. So this is all going according to plan. We should now head for the late Feb highs, which are at 90.50, and then we should then push on to the Feb highs at 90.80. We also run into the 100-day moving average here. We've got fib resistance and the neckline, so this is going to be a problem. Although this is our target around the 90.75, 90.80 area, it's also going to be a very strong resistance. Don't think we'll get through there on the first go. We'll probably have to hover, stall, maybe even pull back a little bit before we break through there. So if we get there before the end of the week, I suggest that might be just a good place for short-term profit taking, and see if it pulls back to give us another chance to buy back in for an eventual break higher. Having said that, a break higher isn't guaranteed. If we don't break higher, this head and shoulders pattern isn't confirmed, but it looks so clear that I wouldn't be surprised to see this break higher and then a shoot up to the 200-day moving average. Maybe we will see that next week, but we'll just have to wait and see what happens around the 90.75, 90.80 area. The E-mini S&P we've been following this week because it was touching this trend line up here. This trend line goes back to May last year, so about 10 months old. We've got a longer term trend line actually that goes back a couple of years if you look at the weekly chart, and that also intersects around this area. So we've kind of got long, medium and even some short term resistance up here, trend line resistance up here at these new all-time highs. Sorry, that's a bit clearer. There's the trend line you can see just at the top of the screen being held. So we're kind of crawling just below that trend line this week. We haven't managed to break above it, and if we don't, of course, we should see some profit taking. Let's try and get you some downside targets if that does happen. The obvious first retracement target would be the Feb highs at 1867, 1866. That would be the first target. We'll probably hold around there if we do sell off, but if we start breaking below 1862, that's a bit more negative, and we could drift as low as short-term trend line and Fibonacci support around the 1855, 1854 area. So just keep an eye on that. Of course, if we start closing above this trend line, anywhere above 1880 I'd say is positive again, and probably encouraging new bulls into the market and buying this even higher. I'm going to finish up with the dollar yen. We've had a good run since the beginning of March, further than I'd expected, to be fair. We're just testing this trend line, which this is a 4-hour chart showing February and the beginning of March. So you can see that if we're joining these peaks up in February, we're just approaching this trend line here at 102.85. It's only a short-term trend line, but we are getting a bit overbought short-term. So perhaps just for this week at least, we could top out around the 102.80, 85 area. It's not only trend line resistance, but it's also around the February highs, so should be a fair bit of resistance. And as I say, bearing in mind we're overbought short term, we could just start to head lower, but I don't see a dramatic sell-off at this stage. If we do pull back, the obvious area would be around these highs, which is around the 102.65, 60 area. That would be your first target, and then you've got some fib support and previous high up here in the 102.55, 50 area. Probably nothing too dramatic lower than that for today at least, but let's just see if it does top out in the 102.80, 85 area. If you are trying shorts, probably a good place to stop out just above 103.00, so it's a fairly low risk reward trade. Okay, that's it for today. Thanks. I'm Jason Sen from daytradeideas.com.